right, let's go across to tech.
Without much delay, let me invite C.P. Gurnani, MD and CEO of Tech Mahindra, to give us a business update.
Ashish, Vice Chairman will go first. Okay.
Sorry. Yeah. Vineet Nair, Executive Vice Chairman, Tech Mahindra, for you.
Good afternoon, folks, and welcome to Tech Mahindra's financial results for the second quarter. Net, I would say that this has been a very good quarter for us. We have delivered quarter-on-quarter growth of about 4.7% in terms of dollars. Our quarterly revenue has exceeded $750 million mark, which I think for us, we see that as a landmark. And our annualized Tech Mahindra now run rate would be marginally above $3 billion. Our EBITDA improved by 2% quarter-on-quarter and now is at the level of 23.2%. That also is a cause for satisfaction. Coming to the specifics of Q2, revenue stood at 4,771 crores, up 16% sequentially and 35% year-on-year. In dollar terms, it was $750 million, up 4.7% quarter-on-quarter and 17.6% year-on-year. EBITDA for the quarter was at rupees 1,111 crores, up 47% year-on-year and 29% sequentially. EBITDA margins improved by 220 basis points to touch 23.9%. I beg your pardon, 23.3%. Consolidated profit after tax for the quarter was 718 crores, up 4.7% quarter-on-quarter and 58% year-on-year. So these were the results as we see it for quarter two. Now coming to the macroeconomic conditions globally, there was a sense of relief when the issue pertaining to the fiscal crisis in US was resolved. It was not a surprise, but nonetheless, it was a relief. In Europe, has started looking better. There is a resurgence of confidence in the economy. There are what they term as green shoots are apparent. But even more importantly, what we find is that on account of the economic crisis they went through over the last 3 years or so, they are now consciously attempting to rejig their economies. And that involves identifying and selecting cheaper or more cost-effective solutions. And that is where India and India's IT industry becomes relevant. The rest of the world has always been growing, and over there we find greater potential appearing in Australia and also in Africa. I think our foray into Africa in the last 2 or 3 years is going to stand us in good stead, and I see a lot of action emerging there as we go along. In summary, I would say that we have managed a satisfactory performance in the quarter gone by, with growth across all our major verticals and regions. I do believe that the merged Tech Mahindra with unified brand and platform will continue to capitalize the market opportunities which are emerging in the current scenarios. I may add as a postscript that our efforts at merging the two companies have gone almost flawlessly, almost very, very smoothly. We are now one company with one objective. Our information systems are integrated. Our HR policies have been amalgamated. And therefore, there is very little to distinguish from what was earlier Tech Mahindra or what was earlier Satyam. So with this positive note, I would ask our Chief Executive to come and get into greater details about how the company has done and what his plans for the future are. Thank you so much.
Thanks, Vineet. Again, good afternoon, good evening, everybody. This quarter's financial results clearly make all of us very, very happy, very proud. And on behalf of 85,000 plus associates, I can say that getting that customer confidence actually keeps us going every day. If I look at our focus and the way we transition in this digital world, the way we have positioned ourselves for the connected world and the connected solutions, I think it is just a time where we believe that the best is yet to come. And the reason is very clear, that it's not about the smart devices that we have in our hands, and I can see all of you happily using them to the fullest extent, but the reality is that some of the markets outside these smart devices are going to become bigger and bigger. Whether it is some of our solutions around connected cars or some of our solutions around digital enterprises, it is clearly the best is yet to come in terms of connected world and connected solutions. We clearly realize that the amount of collaborative consumption that is happening around us, the challenge today is not about what information we need, but is actually how to discard the information. And that's where some of our practices and our investments into platforms like iDecisions platforms, I actually, every time I sit with my team there, I actually see more about what they're going to discard of in terms of information, how they're going to actually not use the data that is coming in streams and hordes, but really how to do it. And I believe that decision on creating decisions platform for various verticals and various industry continues to build on our theme of connected world and connected solutions. Overall, coming to this quarter, I strongly think that we have done very, very well. And this is one of those perfect timings where my geographies, my verticals and practices all have done well. That we are 4,700 crores plus in revenue. That we as a company would have more than 520 million of cash reserves. That we as a company have grown 4.7% on the dollar terms or 16% on the rupee terms. I think it is clearly based on a good performance from practically all the geographies. Just to give you some data, my retail, travel and logistics sector has done extremely well. The media and entertainment and the technology sector has grown 3.8% quarter on quarter. BFSI has grown 5.5% quarter on quarter. Telecom has grown sequentially 2.7%. Again, for a large practice that we have in telecom, that's an incredible growth. Manufacturing has again shown a steady growth. This time it has been a growth of 1.1%. Europe turnaround has obviously impressed us the most. They have had 6.8% quarter-on-quarter growth. US has grown 1.5%, and rest of the world has also grown around 1.5%. Overall, I'm just preempting a question that you always have, which is on the large deals. We have declared, we probably signed a little more, but we have declared 2 large deals. One, you saw the press announcement, which was with the Volvo. And the second one, we have signed up with a large insurance company in US. So these 2 deals we are now declaring as the 2 major deals in the enterprise segment. One of the large deals that we declared, which was again with Base in Belgium, where we signed a 250 million plus network services. It was our first large integrated network outsourcing deal. A network managed services deal. We believe it is a opening of the new market. In general, I would only say is that we are excited about our positioning in the digital world. We continue to get awards from and more recognition from the Gartner, the Oracle, or the various agencies around the world. Our total headcount is now 85,000 plus. It's an addition of about 2,172. And our software strength is, software IT professional strength is at 53,337. Overall, I can say is that we are on the right trajectory, and our leadership pipeline, our new initiatives like the Young CEO program or 1,000 Leader program are finding a lot of traction internally. As you know that, to bring some of the operational excellence into the company and take advantage of some of the integration challenges. Integration challenge which was there that time. Now, as you know, Vineet has already shared that integration is behind us. But overall, I can only say is that despite of all that, optimization, consolidation, and growth that is happening, and particularly some of our sectors which have been in high demand, like mobility, our attrition is in the range of 16%. And I can only say is that there's a lot more data, and Milind is a better guy to give you more data. So I'm going to invite Milind to come here. Thank you. We can have.
Tailwind coming from the rupee depreciation, which is about 11%, and part of that was invested in the business, and partly what is getting reflected in the margin improvement.
How are volumes this quarter?
Volumes have grown by about 5%. So.
And pricing, because there's been some concern over pricing likely to see a decline. Has it been steady for the quarter?
Pricing has been really steady. Nothing.
Quick question to Vineet. Vineet, Europe, of course, has grown substantially for this quarter. As you said, you are seeing some kind of recovery, but going forward, say in the next 2 to 3 quarters, I understand you can't give guidance, but what is your view, conversations you have? Will you be steady enough this time?
As always, I'm cautiously optimistic. All I can say is that macroeconomic conditions, which are the driver for most of the business we secure have improved. Have improved in US, have improved in Europe. As I said, acceptability of of external assistance in terms of technology there's far greater acceptance in Europe now than it was earlier. Asia and Africa are also looking good. So generally, I think that pessimism which came in the last 2 years is kind of lifting.
There's been some sense that from the initial conversations that most IT players have started having with clients, there is a sense that there could be a marginal uptick in budgets. Any sense that you get from clients? Is there a possible uptick for next year budget, 2020?
It's difficult to categorize that it is budgets are expanding, but I can only say is that overall requirements of organizations around the world are definitely growing. And the reasons are very simple, that technology is becoming all pervasive. Number two is that there are a lot more new solutions. For example, you come across a digital home as one solution, you come across digital enterprises as one solution, you come across the need for analytics being much higher, or you start looking at cycle time to market getting reduced. So which effectively mean that from a concept to the shelves, that if you're going to reduce it, it's not only your engineering time which has to reduce, it is also that your whole supply chain has to become faster, and that's where the technology plays a huge role. Will it translate into higher budgets? My personal opinion is that the budgets will remain almost stagnant. However, there will be future efficiencies or cost difference that will come in because of new technologies like cloud.
All right, that's Tech Mahindra speaking on their numbers. We leave it there for now. Take a quick break and come back with the headline.